Okay, a very, very warm welcome, guys. My name's Aaron Hill, and I'm one of the analysts here at FP Markets. So from me and the FP Markets team, thank you all for taking the time out of your day to be with us. Now, this is a presentation on trading psychology. Unfortunately, this is an often unexplored topic, but remains one of the most crucial to your trading success. Just really quickly, guys, please do me a favor and let me know if I'm coming across loud and clear and the welcome page is visible. If you have any technical issues during the presentation, please let us know, and our support team will try and get things sorted. Thanks, guys. Okay. So look, right off the bat, I'm not a psychologist. In this presentation, I can only talk about things I experienced in the past with trading, and those things I experienced and learned from my mentors. It would also be great to hear experiences of other traders here today, as we all react differently to trading and risk. As usual, a recording of the presentation will be available through the FP Markets website and on FPM's YouTube channel. Support also send out an email after the webinar ends with instructions on how to view the recording. And also, as I highlight in every webinar, please feel free to check out FPM's Trading Hub. It's packed with free educational content and daily analysis using fundamental and technical analysis. Also, be sure to check out Gary Burton's technical analysis. The guy is incredibly experienced, which is clearly demonstrated in his analysis. Okay. So guys, just bear with me quickly while I run through the disclaimer on screen, and then we can dive into the topics of this webinar. Our disclaimer informs viewers that information presented in this presentation is intended for general advice only, and none of it should be relied upon as personal advice. FP Markets do not take into account your investment objectives, financial situation, or particular needs. And that's really the main parts of the disclaimer. It's usually there to say what we discuss in this webinar should not be considered as investment advice, and you should always do your own due diligence with everything in trading. Okay. So as for topics, you know, whilst I was prepping for this webinar, I found it difficult to condense the topics, as trading psychology is a huge subject, and I wanted to provide the best information for any beginner traders present. So what I went with was a somewhat broad selection, kicking off with obviously what is trading psychology, or more commonly referred to as trading mindset. We'll then switch things to how important trading psychology is. Excuse me. For newer traders, I really hope you take something from this, as I wish I honed in more on trading psychology when I began my trading journey. It is incredibly important for traders. And finally, recommended study. So this presentation, most of the ideas are largely based on the understanding I took from the work of the late Mark Douglas in his book, Trading in the Zone. For those of you who have never heard of this gentleman, he helped a truckload of traders by simplifying the psychological component of trading. And for those of us who learn better through video, I'll copy and paste the links to his YouTube videos at the end of this presentation. If you don't take anything else away from this webinar, please watch these videos and watch them again and again until it's ingrained, until it's stamped on your brain and it becomes a habit. It will transform your mindset, or it will help transform your mindset from that of an amateur worrying about whether individual trades will win or lose, to a professional trader who understands you do not need to know what's going to happen to be profitable. Personally, I'm incredibly passionate about trading psychology, and it's something I will probably never stop studying. So, and following this, we'll look to take on some questions and maybe discuss some of the psychological issues you face in your trading. Or guys, we can quickly check out some chart action. It's totally up to you at that point. And please feel free to go ahead and send questions regarding our content or suggestions for future webinars to me and the research team at marketanalyst@fpmarkets.com. So, what is trading psychology? Now, guys, most of us, I would say 98% of us, we got into trading to make money. For me, there's absolutely no shame in that. As we strive to improve our standard of living, not only for us but also for our loved ones. Although there are several reasons we try our hand at trading. Common examples could be to generate enough income to possibly leave the 9 to 5 to spend more time with family, to fund a retirement plan, or even to teach kids. To teach our kids a method of investing that so they would be financially set up in their future. Whatever the case may be, the primary goal is to make consistent income. As I found out early in my journey, as I'm sure most of us here also did, trading is not as easy as we believed it might have been initially. One of the factors potentially stopping you from reaching a level of consistency is your trading mindset. So, what is trading psychology? For me, trading psychology refers to the emotions and mental state in your trading. You know, aspects of your character and behavior that can ultimately influence trading actions. Some of you guys may have a different definition, which if you want to share, it would be great to hear. Trading psychology is, you know, despite being an overlooked subject, is as important as other trading concepts such as market analysis. The psychology of trading is complex, and you know it does take time to fully master. I really don't think we can actually suppress our emotions, personally speaking, you know, to become a robot. But I know that emotions can be controlled. So look, fear and greed, two of the most commonly known emotions associated with trading psychology. Other emotions, of course, that drive trading behavior are hope and regret. Greed can be thought of as excessive desire for wealth, so extreme that it clouds rationality at times. So the characterization of oh, I'm getting some questions about my PowerPoint's not visible. Give me a second, guys. 1 second, sorry about this. Guys, can you see my PowerPoint? Just to confirm my PowerPoint slide. Just ping in yes or no. No, yes, no, yes. So we've got more no's than yes. Right, I'm not sure what's going on there, guys. Just give me 1 second. How about now, guys? Oh dear. Ah, yes, we're getting a lot of yeses. Brilliant. Okay. Oh, fantastic. Cheers, guys. Sorry about that. Okay, so look, what was I? Fear and greed. So look, the characterization of the greed-inspired investor, or trader assumes this emotion leads traders towards a variety of behaviors. This may include making high-risk trades. I'm sure we've all done that. Taking on position sizes larger than you usually would. Additionally, greed may motivate investors and traders to remain in profitable trades longer than their trading strategy suggests. Greed is said to be more apparent in the final phase of bull markets when speculation runs rampant and investors generally throw caution to the wind. On the other side of the fence, we have fear. Fear causes traders to close out positions, in my opinion, prematurely, or to refrain from taking on risk because of the concern about loss. Fear can also morph into a panic. Regret may also cause a trader to get into a trade after initially missing on an initial reaction because the currency pair moved too fast. This leads us nicely on to fear of missing out. Now, I'm sure even newer traders have heard this saying, fear of missing out, or FOMO as it's known. This is one of the most treacherous emotions prevalent in the financial markets, in my opinion. Parabolic rises. Think Bitcoin's rally. This type of movement entices traders to buy, which can lead to huge emotional stress when the market reverses and moves in the opposite direction. So look, FOMO is simply the fear of missing out on the profit you might make if you don't buy a rising market. I guess you can also say the same for those selling markets as well in a declining market. So an example of FOMO is not just in parabolic markets or major sell-offs. I found that I was most affected by FOMO at levels I had not fully backtested. This was a mistake on my part for not fully testing the strategy. So what I mean by FOMO at key levels, imagine a support level derived from, say, a quasi-modal formation. This is something I use daily in my, hi guys, thank you. This is something I use daily in my market analysis and has proven an effective way of determining support and resistance. So look, imagine price bounces from the support of which you do not fully have confidence in. Some trades, depending on how you're feeling that day, are likely to be overlooked, right? So, but once you see the level hold price and assuming we're trading currencies, and the currency pair begins to rebound, this triggers, well, it did in my case, how can I explain this? A fear of missing out, right? So a fear of missing out on what could be a huge move off the level. So here I would enter 10 or so pips following the reaction, therefore clearly diminishing the risk reward on the trade. The worst case, of course, is when I did jump in the market and price failed to push much beyond my entry, and the support level actually gave way. You can just imagine the frustration. So look, another emotionally based decision in trading is a concept known as revenge trading. Again, I'm pretty sure most of us, even newer traders, have heard of this. So this happens when traders suffer a significant loss, or sometimes, as in my case, consecutive losses. Rather than looking to their trading plan to make sensible decisions around the incident, traders often jump back in, and that's when things can really become challenging. Traders tend to end up plowing a lot of money into a trade that loses in attempt to reverse losses, often making losses even bigger. That causes a vicious cycle, And guys, that really has to be avoided at all costs. Revenge trading is not a place you want to be. As I'm sure you can appreciate, I've barely scratched the surface in terms of trading psychology, the definition and some of its factors. But I hope what I've said so far has been clear and hopefully helpful to newer traders here. So let's kick things over to the importance of trading psychology. 1 second, guys. Let me have it. So look, trading psychology for me should be one of the first things we should learn before anything else. You can have the best understanding of markets, and a trading strategy most of us would sell our granny for. But without a handle on your mindset, I believe it's almost a guarantee that you will fail at trading. This is how important trading psychology is. I firmly believe, after talking to so many traders over the 10 years or so I've been involved in trading, the key to trading success is emotional discipline. If intelligence was the determining factor, there would be a lot more people making money consistently in the market. As some of you are likely aware, doctors, lawyers, and engineers, some of the most intelligent people try their hand at trading and quite often fail. Yet on the other side of the field, we have successful traders who have little education. So look, what made me take trading psychology seriously was one event I remember. It was vividly. I was trading a live account about 7 years ago, and I was trading a fairly large account at the time. And I was actually doing quite well. I stuck to the rules most of my time, but there was one trade that really changed my whole perspective on trading. And just to note, this was a method that I back-tested. So I did have some stats to work with, but looking back, the back test was not even close, in my opinion. Anyway, so I was long pound dollar, and the trade was hovering about 20 pips above its entry point in my favor. So I was reasonably satisfied so far, and my stop was 25 pips. So it was more of an intraday trade. Price was not really doing much for about 2 hours, and potentially high impacting news was due soon. So my plan at the time stated that I would, if possible, reduce risk to break even if news was due. But did I do this? Absolutely not. I was so convinced I was right on I can smile now, but at the time I was not happy. I was so convinced I was right on this one individual trade. I actually increased my risk and moved my stop lower. So I actually tripled my risk at that point. So the reason I moved my stop was so my reasoning at the time was to give my trade some breathing room during news, because as you guys probably know, during news we can see some whipsaws in price action. So that was my logic, to give my trade some room. It was a big mistake. The news came out negative for sterling, and price plunged through my stop in a matter of seconds. Now, I won't tell you how much I lost, but it was a lot for me. I actually remember leaving my desk following this, and going to the bathroom and looking in the mirror, and my eyes were bloodshot, and I was literally covered in sweat. It was at that point I knew I had to change. I had to change the way I was thinking, and I had to fix my mindset. Because if I had simply followed my trading system and reduced risk to break even, when my trading system, my trading plan told me to, I would not have been in that situation. So yeah, look, guys, it's well known that you could give two different people a winning strategy, and each will often return different results. This could be due to not following the strategy's rules of engagement, risking too much on any one individual trade, or even passing on some trades. What I mean by winning strategy, guys, is a method of entry and exit signals that have proven over time. They've proven over time to be profitable and edge, if you will. So look, is trading possible? Look, I know a number of professional traders who are close friends of mine. My mentors also proved to me trading was possible, showing me their accounts and trading history, because I'm sure, like most of the newer traders here, I was very, very skeptical about whether trading was worth my time or not, or even if it was possible. I can tell you without a shadow of doubt, there are traders who make consistent income from the markets. But these professional traders, they think so differently from most. This is the key. They think differently from most other traders. Just to be clear, you know, the professional traders I know are not, I guess, what you would call market wizards. They're not geniuses. They're certainly not Warren Buffett. They're just the average Joes. But they have realized in order to reach their goals in trading, they have to think differently from the average trader. As I'm sure you're all aware, the average trader usually loses. So look, when I began trading, I thought that market knowledge and analysis, you know, the ability to pinpoint high probability trading points was all that's needed. But it was just not the case. In fact, this, I believe, is the key difference between, you know, that of an analyst and a trader. An analyst operates objectively with almost zero emotional connection, right? The trader, however, has to face his or her emotional demons to succeed. This is why you see analysts with great ability to highlight high probability areas, but do not personally trade. This is often confusing for newer traders, but the reason, you know, is these analysts may simply not have achieved the emotional discipline required to take advantage of their analysis. Look, guys, I really do hope this makes sense, and as it's incredibly important. I don't see any questions, so I assume it's all going well. Okay, so look, let's switch things over to so a couple of things I know traders really struggle with from a psychological trading point of view. So paper trading or demo trading is something I see traders sometimes sidestep, as they're told there's little point in trading on demo as the psychological element won't be present. I can only tell you what I found in my years with the charts, and for me, demo trading is useful. Guys, can I just ask how many of us here actually have used a demo account or are using a demo account? That would be great if you could let me know. Have you found use in it? Yeah, always. That's brilliant. Yeah. Okay. So most brokers actually provide live feeds. So you're trading on a live feed anyway. Ah, excellent. So we've all used it. Okay. Yeah. So as I said, look, for me, it's demo trading is useful. Yeah, Roland, I think that's your name. He said that use demo account before. However, it's not the same when using your own money. So true. So true. But so look, I'll get onto that in a minute, Roland, because I have some points on that. That's a really good point. So look, Mark Douglas in his book Trading in the Zone. I'm sure some of us here have read this book because it's really, really popular and it's so good. So Mark Douglas in his book Trading in the Zone states that demo trading offers the trader a representation of what your trading could be like if you simply followed your trading rules. So the theory is that on demo, we're not affected by the emotions that trading with live money brings. So look, if you're able to make money on demo, theoretically, you should be able to with a live account. But with a live account, you deal with the emotional aspect, and that's the problem, right? You often hear traders complain that their results on demo were far better than their results, their live results. This is likely down to trading psychology and discipline. Without this understanding, trading is, it's an incredibly tough business to succeed in. And demo accounts for me are perfect to test trading strategies and familiarize yourself with the platform's functions. Okay, so look, losses, trading losses. So what generally happens when to a trader when they lose? How do we feel? The same can be said for winning trades. How do we feel? Look, guys, from my perspective, when I first began trading, I took a loss incredibly personal. Consecutive losses were, they were extremely difficult for me to handle. The feeling of losing and being wrong at the same time was just a psychological hell for me. It was a shock, if I'm being truly honest. I actually felt the market did this to me, which was simply not the case. I was doing it to me, if that makes sense. As for winning trades, I often slipped into a euphoric state where the world was literally my oyster. Consecutive wins made me feel like a trading god. It's quite embarrassing to admit, but consecutive wins made me feel like I could take on anything. As I said, the world was literally my oyster. Your reactions to wins and losses will likely be different, but this is how wins and losses made me feel until I understood the psychological component of trading and how crucial it was. And if I'd have only listened to my mentors at the start, they told me trading psychology is important, but me knowing everything, I thought, analysis is a way. If I can pinpoint a high probability trading strategy and use this, what could go wrong? I'm going to make money. It didn't work like that. So what helped me was focusing my mind on my trading mindset. So I knew that losses are a part of trading. I knew to think of trading as a business. I knew that a loss was simply an expense, like any other business. But the key thing here is that I did not truly accept this, and therefore I did not accept the risk. And that was my problem. Without truly accepting the risk and accepting that any individual trade can lose money, my reaction to loss was painful, emotionally painful. What my mentors did to overcome their own fear of loss, because once I started realizing that trading psychology was really important, I questioned them. I asked them about this a lot. So what they did to overcome their own fear of loss, well, not to overcome the fear, more control it, was to ensure that all trading strategies had a positive expectancy before hitting live markets and trading with real money. I won't go into too much detail on this, but trading expectancy is the average amount you can expect to win or lose per trade with your method when a large number of trades are taken, which can be found by paper trading. To calculate your trading expectancy, you need to know three things: your win percentage, your average win, and your average loss. So the calculation is, if any of you guys are interested, I can copy and paste this into the chat if you guys would like. But the calculation is the probability of win, so your win, your percentage of winning trades multiplied by the average win, say $200, minus a probability of loss multiplied by the average loss. Tell you what, guys, I'll ping this into to the chat box just to whoops. Okay, I think that's all in there. Okay, guys. So look, on to the next aspect, distractions. Give me a second, guys. Okay, so look, distractions. We're only human, right? We all have things going on outside of trading. Unfortunately, these things can influence the way we trade. So look, if for example you had a terrible day at work, just a terrible day, it doesn't have to be at work, and you try to trade, what do you think the outcome will be? It is unlikely to be a positive one. If you're upset and angry, this may lead to aggressive trading, trading that could prove disastrous. What I mean by aggressive trading is taking on more risk than your trading plan permits, and of course, possible revenge trading. I know this may seem common sense, not to trade on these days, but you'll be surprised how many traders actually go ahead and trade, and often make their day 10 times worse. I know this for a fact because I was one of them. I didn't care how bad my day was, I would trade. But it is recommended that if you're distracted, you should not be trading. It can really influence your trading decisions. Guys, just simply take a day or two off, cool down. The markets will be there when you return, and you'll be in a clearer state of mind, which is imperative for successful trading. Now, guys, okay, I have a few comments here. 1 second, guys. Losses are only like overheads if trading according to the strategy. Yeah, thank you, Keith. 100% true. Losses are, as I recently just touched on, losses are like overheads. It's an overhead to a business if you're trading according to a strategy. Good point, Keith. Okay, so look, thinking in probabilities. What does it mean to trade? What does it mean in trading, and why is it essential to one's consistent success in trading? I think the reason why so many fail in trading is that as humans we crave a certainty. We add more lines to our charts, we add indicators, we go on trading chat rooms, we go to forums, and hope others will confirm our opinion, all to add to our certainty. But there is no certainty in trading. There is none, just probabilities. As soon as you figure that out, the sooner you will be profitable. It is therefore recommended to actually embrace the uncertainty and stop trying to find, the infallible system or guru that eases your fear of losing. For me, I don't know how many, it must be in the hundreds of trading systems I've looked at, and exactly what I just said there, looking for the infallible system. I just could not stop. I was addicted to it, literally obsessed with the perfect trading system. I wanted 80%, 90% wins, win ratio, and I even at that point, at an early point in my trading, I didn't even care about risk reward. I just wanted to be right. It was such a terrible mindset to have. It was guaranteed failure. So look, the point is, stop trying to find the infallible system or guru that eases your fear of trading. There's so many gurus now. Just check on YouTube. If you search a YouTube clip on trading on YouTube, guaranteed every time you can have this guru that's making this amount or sign up to this course. Just be careful. That's all I'm saying. I have a question here from Keith. How important do you think keeping a journal is in helping psychological issues? This is something I didn't touch on, Keith. Thank you for bringing that up. A trading journal is incredibly important. I would wholeheartedly recommend everyone keeps a trading journal, because what a trading journal does is it logs your emotions during the trade, before the trade, and after the trade, and how you're feeling. So you can really use that to hone in on your strengths and weaknesses. So yes, 100%, a trading journal does help with psychological issues, because at the time when you're focused on your trades, you're focused in a trade, it's almost like, well, it was for me, it was almost like tunnel vision, almost like nothing else outside could get in. I was literally fixated on the chart, pip by pip by pip by pip. So 100% keeping a trading journal did help me for sure. I have another question. Are you giving e-certificates for the participants? No, I do not believe we are. And good morning, Odeon. So look, probability. As I said, there's no certainty in trading, just probabilities. So look, probability is simply a measure of how likely an event is to occur out of the number of possible outcomes. And this is something I took from Mark Douglas's book. He really goes into that in Trading in the Zone. Thinking in probabilities for me sums up the essence of trading. Whether a trade wins or not it shouldn't be a concern. Look, no one likes losing, but it is part of trading. It's a part of trading you cannot escape. But the beautiful thing about trading is there will always be other trades and winning trades around the corner. So if you've done your back testing and understand the system has an edge, the work is done. You then have to simply follow the rules, and that is it. If we understand the trading system recognizes a positive expectancy, basically a high probability of making money over the long term, ask yourself, is there a need to stress whether the next trade will be a winner or not? Absolutely not. And this is why when you speak to professional traders, they almost have a calming vibe. I'll tell you, when I was, I think it was in the first year, I was not in a good state. I was actually trading live money, ridiculously silly it was. And this is when I first met my mentor. And he said something to me that really stuck with me. And he had that calming vibe. And he was making considerable amounts of money. And he said to me that he was British as well. And he said to me that trading should, I emphasize the word should, be as easy as making a good cup of tea. And you can imagine how confused I was at that time. I was struggling. I was really struggling. I was searching for that infallible system. And I was like, how can this guy possibly say that, but yet make money? So they have this almost calming vibe about them. Yeah, so look, finally, discipline, guys. Discipline is a key trait. Every trader needs. The market gives you infinite opportunities to trade. You can literally trade several currency pairs each trading day. Traders require discipline to do nothing when there are no opportunities present, but they must stay alert for potential opportunities. Then they need a discipline to act instantaneously when trading opportunities occur. Once in a trade, traders require discipline to follow their trade plans. So really, guys, discipline is needed, to backtest and also forward test your trading system. Discipline is needed to exercise trade management and follow your trading plan. Discipline is required to step away from trading when you're emotionally charged. Remember the distractions. And discipline is required for everything, not only in trading but also in life, right? Okay, so let's click over onto recommended study. So look, as I mentioned, I'm not a psychologist. What we discussed in this presentation was simply my own experiences over the years. I've been on the charts and traded live accounts in the past. Those who are interested in furthering their understanding from professionals, Mark Douglas's work is a must for any aspiring trader, in my opinion. He really does a great job of simplifying simplifying trading psychology. In his books, Trading in the Zone and also the Disciplined Trader, which are worth every penny, in my opinion. Each time I read them, I learn something new, I feel. So look, just quickly, in Trading in the Zone, Mark Douglas states that having a probabilistic mindset accepts 5 fundamental truths. So first one, anything can happen. Anything can happen in the markets. Second one, you do not need to know what is going to happen next to make money. Third, there is a random distribution between wins and losses for any given set of variables that define an edge. Number 4, an edge is nothing more than an indication of a higher probability of one thing happening over another. And the fifth one, every moment in the market is unique. If you guys are interested, as I said at the beginning of the presentation, I'll post the 4 YouTube links in the chat box for all to watch. They are reasonably long presentations, more than an hour long each, but they are worth the time, that is for sure. I haven't seen any yeses or nos, but I'm going to ping the YouTube clips into, good, okay, cool. Yeah, so I managed to find parts 1, 2, 3, and 4. I'll just ping them in the chat box for you guys. Oh, hi, Jon Snow. I'll see you. Right, okay, I'm not sure if I hope you can see that, see them links. Brilliant, all right. Make sure you do watch them, guys, honestly. It's a little bit embarrassing to admit, but I literally listen to them in the car. So I don't have the radio on anymore. I put good old Mark Douglas on my phone. And so his stuff is really ingrained in me now. So look, although most of my focus has been on the work of Douglas, other well-known books are out there are the Market Wizards series by Jack, I believe his name is Schwager or Schwager, I'm not sure. There are a total of 4 books in the Market Wizards series, I believe. Market Wizards, New Market Wizards, Stock Market Wizards, and Hedge Fund Market Wizards. So all these books consist of interviews with top traders in the world. What I absolutely loved about these books was that Schwager got these traders to share what's going on in their minds when they trade. That was really important to me. So another book worth checking out is The Daily Trading Coach by Dr. Brett, again, Barger, I'm not sure. This is not a book I've personally read yet, but it's on my to-read list. But I have heard through friends and other traders it's a great read. The idea of the book is to encourage you to read a lesson each day. Right, so guys, look, we're now on the Q&A part. I see some questions. All right, a question from Clay. From your comments about the get-rich-quick schemas online, are there legitimate recommended trading mentor programs? I believe there are, Clay. I've not personally looked into it. I think what I wanted to see, I can only tell you what I looked for when I was looking for a mentor, and luckily I was just very lucky to find my mentors that become my friends. So what I looked for was proof. I wanted to see proof that they could trade. If they teach, if someone's, look guys, traders can teach other traders. Experienced traders can teach newer traders, even if they're not trading live accounts, through their knowledge, market analysis and things like that. However, to learn to trade, if you're learning to trade from someone, I always looked for proof that they could trade. I know it's kind of yeah, that's a really good point as well, Daniel. Watch somebody trade live, no hindsight trading. But then again, Daniel, they can be just lucky on that time, right? On that day. What I looked for was consistent success. I wanted to see years of, yeah, Daniel, not just once, yeah. What I looked for was consistent success. Hundreds and hundreds of trades taken, losses, wins. I wanted to see everything. I wanted to really get into their accounts, and I wanted to see, right, this guy I'm listening to, he knows what he's talking about. He's not only a market analyst, but he's also a trader, because that was my ultimate goal, was to become a trader. But to become a trader, you also need to be an analyst as well. You need both concepts. So for my advice is the question is, are there legitimate recommended trading mentor programs? I'm not sure, but I know there are some for sure, but I want to see proof. I want to see clear proof. It's okay someone saying they can trade, and if they're not showing any proof, then I don't see any point in taking that course. It's just my own personal opinion. I've been caught out before with trading courses, promising the world. The most I ever paid for, it's quite embarrassing to admit, was 10,000 euros at the time. And that was in my early days. I paid, not really in my early days, that was when I was just looking for different methods, but 10,000 euros was a heck of a lot of money for me. and it turned out to be it was like a lifetime membership thing, and I won't name the company here, but they're still going on now. But none of the traders in my group, none of the registrants in my group made any money. It was just awful, and there was a lot of frustration and a lot of anger that happened from that. Are there things you do next to walking away for a while? So there's a question here, guys. Are there any other things you do next to walking away for a while to stay away from extreme emotion? I try to have my trading plan, or trading system and trading plan, because trading plan incorporates everything, right? So I always have my trading plan on my desk. I always did. So if a trade, if I was in complete what's the word? Extreme emotion, I would always refer to that now. That's there. It's on my desk. It's printed out. It's in black and white. I would read it, and that normally calmed me down, because it gives you it gives you some logic, right? It puts some logic back into your back to your thinking. But that's the only thing. Other than walking away, I would always just sit and read my trading plan. But still, I would always recommend just walk away. Enough. But it's so hard, right? It's so hard when you've had a couple of losses. It's so difficult to walk away, because it's a natural human tendency to want to get back in there and get that money back. But it rarely worked for me. And if you think about it, guys, if it did work, that's going to instill that habit. That works, so I'll do it again, and it will turn on you eventually. Yeah, so I would wholeheartedly recommend walking away. Yeah, Daniel, watch someone. Hi, what's your trade? 100 trades. Yeah, Daniel, great point. So look, if you want to see someone, if you want to learn from a trader, that you want to see hundreds and hundreds of trades that he's taken, both wins and losses. I saw my mentors take losses, and it always amazed me how easy they took the losses, and that's what I learned from the most. Their losses more than anything. Their wins were fantastic to see, don't get me wrong, and these were big accounts they were trading as well, and they were trading for other people as well. But one's retired and one's still going right now. Okay. Hi, what's your strategy? Momentum swing. Thanks. So I look at so this is, sorry, I can't pronounce your name. I'll just mind the Gus, I think that's your name. So hi, what's your strategy? Momentum, swing, or yeah. So look, my strategy is multi-time frame analysis. Look, I'll just ping it over to the charts just real quick. I can quickly explain it there. It'd be easier just showing you a quick. It'll just be easier quickly showing you the chart. So this is the kind of strategy I look at. It does look a little bit complex, but it's really not that complex if you understand price action and chart patterns and trends. So look, I look from a multi-time frame approach. Let's move that. So from the monthly to the daily to the H4 to the H1, I don't tend to go down to the M30, M15. I used to, but I don't anymore. I stick to the monthly for major direction. I stick to, sorry, the monthly and daily to gauge higher time frame direction, and the H4 and H1 to measure the shorter term flow. So I look for price. So for instance, we've got price bouncing off the demand here. We know we've got support coming in off the on the daily time frame. And so look, this is a good point here. We have a double top pattern potentially forming on the H4, right? But we know from the higher time frames, we're also in a trend since the March, the COVID-19 induced lows. We're in an uptrend on the euro, so the chances of this double top pattern working out and getting past this area of support here is very unlikely, in my opinion, just my opinion. So yeah, and I actually pinpointed this area for possible trades, which has been whipsawed right now. So yeah, I hope that explains. So I'm not really focused on a multi-time frame approach. We have a question here. What do you do when you are overpowered by a fear of a trade? I was often overpowered by fear of a trade. So I usually you should have a trade. This is a question from Edward. So look, I always had a trading plan. You should always have a trading plan. So you should not really be overpowered by fear of a trade. If your trading plan tells you an opportunity exists in the charts, on the charts, you shouldn't really need to think. That's what I took from Mark Douglas, a lot of that. You shouldn't really need to think. If you've backtested your strategy, if you know you have an edge, if the trade opportunity presents itself on the charts, there should not really be any fear of loss. It should just be simply clicking the trade in your trading terminal. Do you need to be an expert in technical analysis, i.e. CMT? That's a question from Roland. So Roland, I'm actually on my final level of the CMT. No, I don't. I don't believe you need to take the CMT to be a consistent trader. Definitely not. What the CMT does do, though, is highlight how broad and crazily diverse the technical analysis is. It really opened my eyes to how much there really is beyond just the basic support and resistance and the RSIs and MACDs. So the answer to that for me is no, you don't. My mentors, they were consistently successful, and they weren't CMT qualified or didn't have the CFTe. So that's just my opinion, guys. I mean, some people might think differently. So I have a question. I'm actually scared to take trades. It's not a question. I'm actually scared to take trades from that day. I'm not sure. What day are we talking about? PP? So look, I have another question. Any breathing exercise or meditation you do or did to calm? This is a question from Daniel, and a really good one. The only breathing exercise I did was, the heavy breathing. So I would, before I entered the trade, it was like a thing for me. I would always breathe in for 5 seconds, hold my breath for 5 seconds, then release for 5, and it always made me feel a lot calmer. But again, though, guys, look, you shouldn't really need to do all that. If you've spent the time back testing your strategy and you have an edge, you should be calm anyway. You should be in an objective state of mind. Another question: are you looking at smaller? Oh God. Are you looking at smaller time frames for your entry? 1 minute, 5 minute time frames. Thanks. Look, I used to work with the M5 time frames, but I found that I know my style, I know my weakness, and I'm very impatient. I know that. So I'm very impatient on the lower time frames. So if I'm working with the lower time frames, I'm a day trader, right? So I want to be doing something all the time. And that led to me over trading. So I tend not to look at the 1 minute, 5 minute time frames unless it converges with my H4 and H1, momentum, the sentiment I'm seeing on that chart. Look, so there's a long one. I've witnessed an anomaly in my MT5. I was on pound dollar M15, and in a moment of high volatility, the terminal twice showed the next candle with 4 minutes delay. What could cause this? I've witnessed an anomaly. Well, I'm not sure, PP, to be honest. You might want to, I'm not sure what broker you trade with, but it might be worth you sending that to the support team. I'm not sure, really, I'm not sure with that. You might be calm when your trade got triggered, but how do you trade your mental state after the stop loss was hit? So look, Daniel, that's a really good question. So look, you might be calm when your trade got triggered, but how do you take your mental state after the stop loss was hit? So look, if the stop loss is hit, that's simply it. You're out of the trade. There should be nothing else to think about. You were wrong, and you've lost some money. But again, though, guys, look, if you've backtested your system and you know that you have an edge, what is one loss in over 100 trades? It's nothing. If you work it out on paper, it's zero. It means nothing. As long as you kept your risk to your predetermined level, what is the loss? Really, when you think about it, it's literally an expense. You're paying to participate in the market. I don't see any more that should be thought about. Before I would have got angry. Before I would have got angry and then probably got another loss, and it turned into a complete show. I won't even go there how bad it got for me. But there should be nothing to think about. Stop loss hit means you were wrong. It's as simple as that. Your analysis was maybe wrong. you know, as I said, if you've tested your strategy and you've and you know you have an edge, there's nothing else to think about, in my opinion. There really is nothing else to think about if you've done the hard work. Now, one thing I will say about a lot of traders I've seen before, that we expect to jump into live trading after 2 months of studying. It's not going to happen, guys. It really won't. I don't know of any trader that's done that. Trading the markets takes a long time to not even master, because I don't feel you ever master it. To reach a level of proficiency where you can take consistent money out of the account, out of the market, sorry. So, look, for me, you need to put in the work with backtesting. When I say backtesting, there's I assume most of us here are discretionary traders, right? What I mean by that is we look at the or partially discretionary, I guess. We look for a pattern to form on a chart, and we decide whether that's a pattern we want to trade, right? So we need to test that. We need to test how many wins, how many losses that has. We also need to test it in multiple market conditions: trending markets, uptrends, downtrends, ranging markets. How does it perform? We need to know these. We need to know the stats. We need to know on average how much risk reward each trade on average provides. So you really need to put in the work. This is not something you can just go and trade live. And this is a big mistake I see a lot of traders do, and then they say you can't make money trading. But if you don't do the work, what do they expect? I really don't. It boggles my mind. I know this might seem quite harsh, guys, but I hope I'm helping some newer traders here to actually put in the work before they risk money in the live markets. You know, the demo account is there for you to use, guys. Use it. Buy the Forex tester. I have no affiliation with them. Forex tester, I think it's like $40. It's the price of a losing trade for a lot of smaller traders. Invest it. Oh, sorry, $200. Okay, $200. I think that is. But it's worth the money. It's worth the money if you want a career in this, right? So the Forex tester is brilliant, in my opinion, to test partially discretionary trading strategies. Look, guys, we're running out of time now. Sorry, Forex what? So Forex tester. 1 second, guys. I'll type that in there because it's yeah. I'll just type it in there for you guys. No worries. Okay, Forex tester 4 is brilliant. But look, guys, you don't even need to buy that. You can even go on MT4 or even TradingView. I think has a backtest replay replay. But Forex tester has been the best for me, without a doubt. Whoa. So, guys, look. I think this is all we've got time for today. My throat is literally on fire now. I sincerely hope some of the newer traders here are able to walk away with something from this presentation. Look, guys, please do watch them YouTube links. Just please watch them YouTube links. They will help you. They will really help you. They will really help you. That's excellent. Okay, guys, look, I'm happy it helped some traders here today. So look, as always, look, if there are any specific topics you would like the team here to talk about, please be sure to send in your suggestions to either support@fpmarkets.com or marketanalyst@fpmarkets.com. Also, be sure to register for the FP Markets Telegram channel to get instant updates. So look, guys, on that note, thank you all so much for taking the time out of your day to attend this presentation. I really hope you took something away from it. And guys, look, please do send your questions across to me. If you have any questions or you didn't understand something, I'll be more than happy to reply to you via email. So have a great day, and I'll catch up with you all very soon. Thank you very much.